Welcome to another video. Today we're looking at ADA US dollar on multiple time frames. This will be a very quick video, just a quick update on what to expect over the next couple of weeks, and a quick look at the lower time frames. We are currently in a correction. We are going to look at that as well, and in the end of this video you will understand why this could be a very nice opportunity to get into a trade. And without further ado, let's go. Let's start with a quick look at the monthly chart. We are still in this process of breaking out of this falling wedge, and this candle here, this monthly candle, will close overnight, and it will likely break or close above this previous resistance, which is positive. It just means that it increases the likelihood that we at least test this local high here, and once we can close monthly candles above this resistance here, we can expect much higher prices, $2 and above. Actually, even all-time high, right? So first resistance area would be the area here at the 61.8 resistance level at $2, and next target would be the all-time high. But we don't. This move, right? The move to $2 is not confirmed yet. First, we have to take this local high here. But why should we not see it, right? Because the overall structure is bullish. We have a high, a low, a higher high, a higher low, and next thing you expect is a higher high. That's simple, right? That's just what you would expect now. And we are getting the signals. We're getting a breakout here. We are getting the momentum. Both lines are above zero. So we are in a bull market also in momentum terms on the macro picture. And the histogram is producing greener blocks, and they're getting higher. And we should expect them to slope up and create a new high here. The RSI, as I told in my previous video, in this cycle should at least retest this overbought area here at 70. So overall the macro picture is looking bullish. We are in a bull run. We are expecting much higher prices for ADA. Now let's get into the Elliott wave structure on the weekly chart. And in the last video, I introduced you to the nested impulse setup, or the so-called double 1-2, and we divided it into 3 phases, right? Where we accumulate bullishness, where we have impulsive breakouts, but they get sold off completely because people are not convinced that the trend is real yet, and it is followed by this very, very impulsive phase where you break the local high, and the majority of people actually accepts and realize that this trend is real. This is where they FOMO in. This is when most of the volume is going to be created. This is the part where you as a trader want to be positioned, because it's the easy gains part, right? Not a lot of volatility, just straight up, and very, very low amount of friction, right? This is the parabolic part of the cycle, which could be imminent if we are following this model. We're going to follow it until it gets invalidated. For now, it looks pretty good. So after this parabolic phase, and we are not here yet, right? It's going to take a couple of months, but we could get there. And this is this is when it gets a little bit more boring. Lots of people that bought here, or even here on the way up, they are of course starting to average out of their positions. So that's why you get the sequence of 4, 5, 4, 5, 4, 5, right? This the 4 is the surprising disappointment phase, and 5 is the final advance, right? Final advance because it's closing out a 5-wave sequence, right? The final advance here, the red 5, will close out this wave 3. The final advance in blue will close out the black 3. And this fifth wave here is the final advance for an even higher degree trend, right? So this is the logical structure here, and it is defined by market psychology, right? It's I didn't make this up, right? This is not fantasy. It's just market psychology. You can measure it. You can measure it in by using Fibonacci tools, and you can visually see it. So now enough for the concept. Where are we actually? So we entered this parabolic phase. It is a very early part, and we likely finished this first wave to the upside. I will go into the lower time frames in a minute, and will be more clear then. And currently we are working on this wave 2. The question is, how deep is this wave 2 going to be? And what should follow is the wave 3, right? The most bullish part of this whole sequence. It is the part with the least amount of friction, and it should terminate. Well, let's measure it. Let's pull the extension levels. If we assume that wave 1 ended here and wave 2 is, let's say it has a final downside squiggle, and we end somewhere around, I don't know, 70 cents. A final squiggle down, then we should at least hit $1.80. Because the 261.8 extension level is where the red wave 3 should at least hit. Most of the time, statistically, from a statistical perspective, it even gets higher, right? 361, 300%, but this is the minimum level. This is what we can realistically expect, and I mean, it would make sense. So this would be a 150% move, right? For the most parabolic part of the cycle, this is a decent number, 2.5x from current levels, right? Don't forget, this is the move where we break the local high, where we finally go into the wave that, from a technical perspective, has the potential to test here this $2 area and even the all-time high. So it's not unrealistic for this move to hit $1.80. It could even go higher, but for now, let's be realistic, and this third wave of a third wave should bring us near $2. So we then, of course, see another correction, right? A surprising disappointment in a wave 4, which could lead us back to this local high here, right? This would be very realistic. And then you see this final advance into the 61.8 retracement level, or maybe even the 78.6 retracement level, right, in the $2 area. Now let's have a look at the lower time frames. We are on the 4-hour chart here, and first of all, let's look at this impulsive sequence here for the first wave. I think the first wave is completed, and it gets clear once we dissect this here. So you have this load up phase, you have a 1, 2, 1, 2. Then you go into the more impulsive phase, where most of the gains are being done in a short amount of time, right? This is where the third wave of the third wave gets completed. And once this part is done, you go into the final part, which is a sequence of 4, 5, 4, 5, 4, 5. And that's it. It's a beautiful nested impulse. This is what we expect to see for ADA on the higher time frames for the next 6 to 12 months, right? I do expect us to have this huge blowout, right? The FOMO phase, and then a sequence of 4 5s that will bring us into the all-time high area over time. So, but this part here, it's speculative at this point. It's far away. We focus now on this breakout, on the FOMO phase, right? I think the FOMO phase is what's imminent for ADA, right? On the higher time frames. So yeah, it's funny. It's what we are expecting on the higher time frames. We can see it here in a miniature model or version, right? So yeah, this is a nested impulse. It is completed. I think it's clearly completed at this point, and we are now potentially in this wave 2 here. And now let's dissect this corrective structure. So first of all, this is very corrective, right? You have lots of overlap here. It's you have an ABC here. You have a complex structure to the upside in X. The correction within the correction, and now I think this should be the final part of the correction in W. So this looks like a complex correction. Could also be just a 1, 2, 3, 4, 5 ABC, 1, 2, 3, 4, 5. So in that case, you have an A, B, C, two impulses tied to another. I would prefer to look at it as a complex correction right now. And but in the end of the day, it really doesn't matter. It looks corrective, and important are the levels, right? So if we measure the extension targets, if we measure it by the wicks, we just bounced off of the 78.6% level. If we measure it by the candle closes, it would be barely above the 100% level. So yeah, we saw a significant bounce here on the 78.6% extension level, which is perfectly in line with the 50% retracement level. So this is a first potential bounce target. So if we now if we just revisit here this 200 EMA and fill this wick liquidity, right? Most of the time wicks get filled either 50% or 70-80%. So if we now get back here and then start this bounce, it wouldn't wonder me, because we just wicked into this area here, and between the 50 and 61.8% retracement level, this is the most common bounce area for a wave 2. Right? If it gets very deep, we would go below this trend line here. I don't think we are going to do this, but in that case, we would revisit the lower 60-cent area at 78.6% retracement level. This is the last bastion, right? This is where we have to hold, because below it the probabilities are just flipping bearish. So to prevent this bearish probability flip, we want to bounce. We want to hold this level here at 60 cents. But again, just from probability point of view, a price most of the time bounces between the 50 and 61.8% level, and this is what I'm expecting to see. Primarily, I think we will come down here and terminate between the 78.6 and the 100% extension level, which is in line with the range between the 50 and 61.8 retracement level. So yeah, something like this. I think we will see this. Maybe in a more bullish variation, we just fill the liquidity here and go up again. In a very, very bearish case, we actually retest lower 60 cents. So that are the most likely variations right now, given the fact that we broke out very impulsively in 1. So 2 can be deep. It should be, I think, it should be rather shallow, right? So yeah, that's it. Looks good. Bottom line is this is corrective, and I think this is a wave 2 correction and should at some point here find support and continue to rally. That's it. So thank you a lot for watching, and if you like this video, like it. If you didn't like it, dislike it. Leave me a comment if you have questions or any suggestions, and subscribe to this channel to get more content in the future. Share it if you think that it's worth it, and if you want to ramp up the sentiment for ADA, it will help us all. So with that said, see you in the next one.